Rally Road, Otis Investments, Collectible. These three companies are at the forefront of a concept called fractional ownership. They are making it easier than ever for the everyday sports card collector and investor to acquire the most famous and sought after cards in the hobby. But before we go spending our hard-earned money on these IPOs, we need to take the time to understand how these companies are operating and what the pros and cons of each of these platforms are. So that's what we're going to cover today. There's a lot of juicy detail in here, so you're not going to want to miss it. What's up, everyone? I'm Cardi-C, and thank you for stopping by. If it's your first time here, welcome to the channel. If you enjoyed today's video, please consider giving it a thumbs up and subscribing for future content. Before we jump into the video today, I just want to give a huge shout out to everyone who's been supporting me along the way. Last week, we crossed the 1,000 subscriber threshold, just a number totally beyond my wildest dreams. Here at the channel, I'm trying to bring you some informed discussion about hobby-based startups, hobby finances, and a practical, common sense approach to buying, selling, and trading sports cards. So if you enjoy that type of content, please stick around. Please let me know in the comments below what you enjoy about today's video and what you want to see in the future. The topic of today's video in fractional ownership and fractional investing is technical in nature. So I do want to throw out a disclaimer that you should do research, consult a financial professional, and do not rely on this video solely for buying, selling, and investment type decisions. This video is for entertainment and informational purposes only. All right, now that that is out of the way, we have to lay some groundwork before we start looking at some of these companies in particular. And at the top of that list is defining what is fractional ownership. And at its simplest definition, it's taking any type of asset and using a legal entity to split that asset up into many smaller pieces so that multiple individuals or corporations can come in and invest in that asset rather than one person owning the entire thing. The idea of fractional ownership and fractional investments isn't a new thing. You can buy and sell portions of common shares and equities through apps like Robinhood. You can buy and sell portions of a racehorse, fine arts, and other types of collectibles. And sort of fractional ownership in the antiquities and collectibles sphere gets its origin back in the 1980s from Merrill Lynch's Athena Wealth Fund. We're not going to go into too much detail about it on today's video, so I'm going to give a shout out to Reserved Investments. He's got some great content that covers sort of the antiquities and collectibles universe. So I will link to his channel in the description down below if you're looking to learn a little bit more about the history of Merrill Lynch's Athena Wealth Fund and what his take on these fractional ownership vehicles and companies as a whole is. Fast forward to the current landscape. And as it relates to sports cards and collectibles, there's really three companies that are driving the conversation at the time I'm recording this video in December 2020. Rally Road was the first company to get off the ground. They started by offering fractional investment opportunities in antique cars. They expanded to offer fractional investments and ownership in Rolex watches and different types of historic art pieces, collectibles, before they finally started offering fractional investment opportunities in sports cards. Then came along Otis Investments, a similar vein, not so much the vintage car market, but a lot of vintage collectibles, and they sort of brand themselves as the cultural spot, the spot for you to invest in culture. So that's everything from art to photography to fashion and everything in between. The latest entrant to the market is Collectable. And if you are a part of the hobby-based YouTube community, you'll probably recognize Collectable because they have had a full court press to capture the attention of the hobby. They were founded in the middle of 2020, and they have a handful of IPOs under their belt at this point. So when I started doing the research for today's video, I thought it was going to be pretty simple, pretty straightforward. Let's talk about the platforms themselves, how easy it is to buy, sell, and trade. But I quickly pulled at a loose thread and figured out just how complicated fractional ownerships in these fractional investment vehicles are to work through. So what I did was I made sort of a presentation breaking down some of the key terms and key differences between these three companies. All right, so to kick us off, we've already talked a little bit about the specialty for each company: Rally Road, vintage cars, sports memorabilia, watches, books, comics, wine. They sort of cover the entire spectrum. Otis, you start to get a little bit more refined. Again, contemporary art, sneakers, collectibles. I think at the time I'm recording this video, Otis has only issued 2 sort of IPOs as it relates to sports cards specifically. And then the latest entrant onto the scene is Collectable, and they really take the claim as to the only fractional ownership company, or sole focus is on sports cards and sports collectibles. So one of the first things that I wanted to figure out about these companies was, I'm buying into a card. Let's just say, let's take Collectable for example. They're offering a fractional investment opportunity in an O-Pee-Chee Wayne Gretzky rookie card graded in a PSA 9. When I typically buy into a fund, I am concerned with my rights as a shareholder and what the investment horizon is. You see like target retirement funds that will look out to optimize their values over the life of the fund with an expiration date of 2040, 2050, 2060, maybe it's shorter term, 5 or 10 years. So that's sort of what I was looking for at each of these companies. Rally Road was probably the hardest company to find background information on. You really need to do a deep dive into their filings with the SEC in order to figure out sort of the X's and O's on how all these transactions happen. But at Rally Road, generically, they said these are long-term investments. The buying and selling of the asset itself is at the sole discretion of the manager of the company, which is Rally Road. Now, we're not going to get into a bunch of the nitty-gritty legal details on the video today, but at its core, what you do need to know is that Rally Road, Otis, and Collectable are the sponsor or the manager of different funds and LLCs that go out and have the sole purpose of picking up a card to then go public and issue shares to the Joe Schmoes of the world. Every time there is a new IPO that goes live, Rally Road, Otis, Collectable, or the registered investment advisors that they work with will need to go and file a bunch of different paperwork with the SEC that has different types of disclosures. So to start us off, Rally Road, long-term in nature. The selling of the asset itself is at the sole discretion of Rally Road. Otis is similar. They say we're typically looking at a 3 to 7 year horizon, and the selling decision is solely at the discretion of Otis Investments. Now, here's where we see our first differentiator amongst the platforms. At Collectable, There's no set investment horizon for any of the cards that they're IPOing, and the selling decisions are at the discretion of the majority shareholders of a particular card. Meaning, if Collectible gets an offer for the card to be bought out at what they think is an acceptable price, they will bring the offer to the shareholders of the card, and if 51% of the shareholders vote yes, then the card is sold, your gains are locked in, and then the cash is dispersed to the shareholders of the card. So the first question you have to ask yourself is, do I want any say in whether this asset gets sold? If you trust Rally Road and Otis to maximize the value of that investment, then maybe you're okay letting them be the sole arbiter of that decision. If you don't trust Rally Road and Otis as much and you want to put your faith in the fellow shareholders because they are incentivized to maximize the value of that card, you could go with them as well. Now, when we're talking about the alignment of interests, we have to look at the compensation of Rally Road, Otis, and Collectible. And this is where I was getting really tripped up. For Rally Road, they are paid primarily through sourcing fees, and those are fees paid in cash. Now, you're probably asking yourself, Cardi-C, what the heck is a sourcing fee? If we dive into the finances in the prospectus or the offering supplement that Rally Road issues, there's a breakdown of the amount of money they're trying to raise. And in that breakdown, it has the cost of the asset. It has a bunch of different fees related to grading, authentication, insurance, broker fee. And at the bottom of that table is a sourcing fee that's paid in cash to Rally Road. Now, when I was scrolling through trying to just find what the compensation for Rally Road was, the sourcing fees ranged from 8% to 15%. It depended on the size of the card. If something was IPOing in the $8,000 to $15,000 range, the sourcing fees were typically lower. They were towards that 8%. And then they were bigger on the higher dollar, higher valued items. For Otis, they have a mixture of the two. They have sourcing fees in cash, typically paid in cash, but they could take an equity interest in the asset itself, and then they get 10% of the profits when that asset is ultimately liquidated, regardless of their membership stake in the card. So I could not find anything in the SEC filings related to Rally Road's profit cut, what gamblers refer to as their rake. I'm sure there's probably something in there for Rally Road to capture upon the ultimate sale of the asset, but I wasn't able to identify it in my research. Now again, this is where Collectible really starts to differentiate themselves. Collectible wants their interests aligned with collectors, so they will charge a sourcing fee. It varies, but I saw 6 to 10% in the research that I was doing. And instead of taking that in cash, they will take that in equity of the IPO. This is a great example of a company working to align the interests of the company with the interests of the shareholder. They're not just getting a cash payment in the door, churning it out, looking for the next item to IPO so that they can keep the cash flow coming in. They're going and they're investing in what you are investing in as well. So next up, we have the secondary market. Let's put ourselves in the shoes of someone that goes out, they participate in the IPO, they buy X amount of shares in a 1953 Mickey Mantle. You got two decisions now. You can hold those shares of that card until the card is ultimately sold by Rally Road, Otis, or by a majority of you and your peers if you are on the Collectible platform. Or you can try and go sell those shares to another individual if you had a stock portfolio through Fidelity or Robinhood and you went to go sell that price, it is fully liquid. You'll be able to sell it right away.
It's not a liquid. It's a great many pieces of solid matter that form a hard floor-like surface.
Because these companies are so new, there is some scary stuff as it relates to the secondary market. For Rally Road, the only trades that they are currently allowing are on 1 day per month, and that day is designated by Rally Road. They let you know when it's open, when it's closed, and you have between, I think it's 9 and 4 to make your buying and selling transactions. And if you don't get it in during that day, you're shit out of luck until the next year. Otis is sort of the darling of this category or this characteristic. They have a full active secondary market with buy and sell options. I took a look at a couple of the assets that they had up there, and there was a healthy number of bids and asks. There are people interested in the assets that they have up there. It's not a perfectly liquid market, but it is a long way from what Rally Road currently has, and it's even longer and brighter than what Collectible currently has. So Collectible is brand new. We'll throw that out there. I think they were founded back in September 2020, and they only have a handful of funded IPO cards under their belt. But as of the recording of this video, December 2020, they did not have any option or mechanism currently available to sell shares on the secondary market, which is very scary to me. You can invest a decent chunk of money, and if your peers in that investment vehicle don't want to sell, then you're going to be stuck in it until Collectible comes up with a secondary market or a vehicle for you to be able to sell those shares in an online marketplace. So if you're going into this, you have to ask yourself, what is your risk tolerance? If you're investing in this to acquire some sort of upside in a card that you truly believe in, well, maybe you don't care about being able to sell it with the snap of a finger. Collectible does offer great opportunity, but right now it is by far the most illiquid way to get into those investments. Rally Road is a step up, but they only have 1 day open per month. Otis has the most mature secondary market, but when I say most mature, I mean there's 10 to 15 bid asks for a particular asset, and you gotta hope that those are reasonable bid ask prices for collectors, investors who are incentivized to get into this investment vehicle and they're willing to strike a deal with you. I also thought it would be helpful to put into context the size of their largest sports-based IPOs. And for Rally Road, they had IPO'd a T206 Honus Wagner that graded an SGC Authentic for $520,000. For Otis, it was the 1986 Fleer Basketball PSA 10 complete set that they're currently IPOing for $230,000, which is insane because I think the Michael Jordan alone just sold recently for $210,000, and we're going to get to that very, very shortly. And then Collectible offered the 1953 Mickey Mantle in a PSA 10 for $2.5 million. So those are the largest sports-based IPOs that each of these fractional investment companies have currently released. With the explosion of the high-end sports card market, I can only imagine how quickly these numbers are going to be outdated. Now, I took all the information that we have currently covered and threw it into a summary page. So feel free to pause the video here and take a screenshot if you want to do some additional sort of research into these three companies. Now, for all that these fractional investing companies are offering to the everyday collector, there are a couple things that give me pause, and we're going to break them down now. The first one is the transparency in pricing. So here we're on Otis Investments website. They're offering the 1986 Fleer basketball card set, a complete 132 card set in a PSA 10. You can purchase them at $10 per share. And if you scroll down a little bit, you can see they have this drop market report. So if you click on view report, you can see essentially a flyer promoting the offering. But what I want to touch on here is the drop value, the 18-month high, your share price, and your annual appreciation. So they have set the market on this offering, the IPO, at $230,000. The 18-month high for the cards in this set are $216,000. So right off the bat, you are paying a premium of about 6 to 7%. Now, one could argue that you're paying it because that would be the sort of opportunity cost that it would take to go out and acquire each one of these cards in a PSA 10 on a one-by-one basis. But so these prices are changing all the time. They say an 18-month high is $216,000. For the entire set, the drop value is $230,000. And if we click through to the back, they have it priced out by player. And we can see in this offering, they have Michael Jordan priced out at $91,870. If we click on this link here, it takes us to the PSA's SMR pricing guide, which would have been great when this prospectus, this offering, came out a few months ago. But if we jump over to Sports Collectors Daily, we will see a PSA 10 copy of Michael Jordan's 86-87 Fleer rookie, readily available for a little over $20,000 just 2 years ago, sold for $211,000 in a golden auction yesterday. The sort of barometer for how the sports card market and basketball in particular was doing was whether the Jordan rookie was over or under $80,000 to $90,000, and it just more than doubled that. If we go back to this offering prospectus from Otis Investments, they're looking to IPO at $230,000, which is essentially the market price of the Jordan alone at this point. We have another example over at Collectable. So right now, Collectable is offering the 79 Gretzky rookie card. It's the O-Pee-Chee version in a PSA 9. They're looking to get 6,700 shares offered at $10 a share for a total of a $67,000 valuation. You can scroll through and see some information Collectible discloses about this. But the comparisons, they have the last two recorded sales of this card were in October and November for $79,000 and $75,000 respectively. In 2016, Golden Auction sold a PSA 10 version of this card for $465,000, and they allude to the Heritage Auction that is selling this card right here. So if we click on this tab, we will see what that PSA 10 sold for: $1.29 million in a PSA 10. So as we said before, it takes these companies time to price the card, determine what investors and collectors are going to be interested in as like an entry point for the price, and then they go and offer that. I don't know how much money Collectible is leaving on the table by offering it at $67,000, but if the PSA 10 version of this card just sold for $1.29 million, and the last two comps for this card were at $79,000 and $75,000 respectively, I think this card alone is probably sitting at an $80,000 valuation, and I think that's on the conservative side. So as investors, you can come in and take advantage of the market inefficiencies and capture sort of a guaranteed unrealized return at the time that card IPOs, just based on how long it takes them to value a card, to get all the paperwork together, to issue the shares, and get that out to collectors. But something to be wary of on the flip side is if it went in the other direction. Say they're looking at $67,000 for that valuation on the IPO, and the actual price of the card drops to $60,000. Well, there's probably not going to be a rush of people to try and get in and buy shares in that card. They're just going to sit there and wait it out. And I think Collectible and Otis and Rally Road reserve the right to rescind the IPO if there's not enough opportunity or there's not enough shares to be purchased by the general public. But it's something to pay attention to. Right now, we don't know if the shares of these investment vehicles are going to be a direct one-to-one correlation for the market value of the actual card, because the shares of these investments in the card itself are trading so infrequently. We can't really do that case study yet, and I don't think there's enough of a sample size over at Otis to make that call. I think the other item that is worth just taking a look at is the user interface and the type of information that each one of these companies provide to you. So I went out and I signed up for Collectible, Rally Road, and Otis Investments, and I recorded some stuff on my phone to share with you all on sort of what the platform looks like. So check out what each of the platforms look like. a somewhat comprehensive video about the fractional ownership opportunities and the companies out there as it relates to sports cards and collectibles. Personally, I'm not going to be in any rush to go out and jump into the IPOs of any of these cards quite yet. It is a little troubling to me that Collectible does not have a secondary market yet, but they're a brand new company. We have to give them time to sort of unveil each feature. They got to IPO the cards before they can go and build out that secondary market. As it relates to Rally Road and Otis Investments, they're building in that sourcing fee of like 8 to 15% upfront. So as an investor, what I would be thinking is, all right, this card has to clear an 8 to 15% unrealized gain before I get any profits back. And in the current sports card market, with everything going up, that might be really easy to do. But there's no guarantee that this market is going to stay this way forever. So at this point, I'm going to take a wait and see approach on fractional investments, fractional opportunities as it relates to sports cards, and focus on building out my collection. But I'm going to be keeping a close eye, especially on Collectible, to see how the hobby community interacts with them as a company and what the feedback is for users if and when their secondary market gets rolled out. But that's all I got for you guys today. Let me know what you think in the comments below. Did you get in on any of the IPOs at any of these companies? Are you more excited or less excited about it now after today's video? I'd love to hear what you think. If you got more questions for me, leave them in the comments down below. You can always find me on Instagram at Cardi-C Sports Cards. Feel free to shoot me a DM if you have any questions. But that's all I got for you today. Until next time, I'm Cardi-C. We'll catch you guys later.